Hey. Hey, welcome everybody to the Apiary Facebook or YouTube Live. I'm really excited to be here. Shawn Lucas with me. I'm Nate Allred. It is always a pleasure here to be with you today. Shawn, what's our topic?
Well, we are going to talk about correlations between the U.S. stock market and the U.S. dollar.
Perfect.
Highly engaging and exciting conversation on tap for today, right?
Yeah, absolutely. In fact, I love the topic about correlations because in a lot of places, if you're trading overseas, you know, Japanese yen, British pounds, you know, my house denominates in U.S. dollars. I get paid in U.S. dollars. So for those investors who are out there who are trading overseas, correlation is a big thing to be watching and looking out for. One of the advantages of looking at correlation is a lot of times in other countries, you have a negative correlation between the stocks and the actual currency. So if you're investing into Japanese stocks and it's going up, a lot of times you'll see a negative correlation. You'll see the yen actually decrease. It creates a natural hedge against risk for you. That's the natural thing. But correlation is kind of an interesting thing with the U.S. dollar for us U.S. citizens, right? Because historically, well, with correlation, it's kind of the chicken or the egg question, right? Which one comes first? Yeah, which one came first, right?
Which is it, the stock market or is it the U.S. dollar, right?
Right. Which one is leading which one, right? And historically, there's only been about a 0.4 correlation between the stock market and the U.S. dollar, which means sometimes it follows, sometimes it doesn't. Maybe you could kind of explain.
Yeah, well, maybe we ought to start with maybe just a quick explanation of what correlation means, you know, and you know that there are always going to be measurements between what affects what in financial markets. Is the bonds affecting the stock market? Are currencies affecting bonds? Is the stock market affecting dollars? And so, you know, mathematicians, they love their math formulas, and so they'll come up with these ways of measuring correlation. So let me just kind of just real quick, you know, take our listeners on a just a brief lesson on what correlation is. So if we look at correlation, my sloppy handwriting, my finger handwriting here. So typically what we see is they measure correlation between like a minus, a negative number, which means that it's negatively correlated. Audio is not working. Check our audio. Got to do our, can everybody hear me okay? Tap a Y in the chat box if you can hear me okay out there. Just kidding. Actually do it. We can see. All right, so they'll typically measure correlations as a negative number or a positive number. The bigger the number is, if it's a positive number, that means that as one instrument's going up, the other instrument is going up. Correlation of 1 means that if the stock market, for example, if stocks go up 10%, if the U.S. dollar is correlated at a 1-to-1, then what that means is that the U.S. dollar will also be going up 10% over that period of time. So that's a correlation of 1. Mm-hmm. A correlation of -1 means that if the stocks go up, then 10%, then the U.S. dollar goes down 10%. So that's a -1 correlation. So what you're just told our listeners is that there's a correlation of 0.4.
0.4, right. Which means that sometimes it will go up and sometimes it won't, right?
Yeah, well, it means that, I mean, in very simple terms, if the stock market's going up 10%, say, then we might expect something like a 4% increase in the U.S. dollar. So that's an easy way of thinking of it. It's not technically the perfect way of thinking about it, but it kind of gets you to the same spot, right? So with the correlation of 0.4 between the U.S. dollar and the stock market, that's what we see over the long term. But Nate, what has been happening with the U.S. dollar and the stock market?
So the natural thought with trading and the conventional wisdom says that as the U.S. dollar increases, there's a decrease in stocks and vice versa. So as stocks are going up, we should see a weakening of the U.S. dollar. But there's so many factors that actually go into the pricing of a currency. Stocks is a little bit more straightforward, but with currencies, it's a global thing. We're talking trillions of dollars. So for instance, if the Fed's increased interest rates, you would see you normally see an increase in the strength of the U.S. dollar, right? But at the same time, because of that increase interest rate, you'll see a lot of times less spending, and so they don't spend into the stock market. But that's actually, we're right now seeing the exact opposite, right? So we're seeing an increase in the strength of the U.S. dollar, and we're seeing an increase in the stock market. Maybe you could expound on...
Well, I think it's just the opposite of
or,
that.
Sorry,
the stocks are going up, but the dollar is dropping, right? Yeah, and I think, last measurements that I looked at, here in latter part of 2017, first part of 2018, we're seeing the stock market go up, 10%, but we've seen almost the exact opposite happening in the U.S. dollar. We've gone down almost 7.5%. So there's a negative right now. It's a negative 0.75 correlation between stocks and U.S. dollars.
Which historically is,
I was going
to say, I'm not going to say unprecedented, but very, very rare.
Yeah, maybe 4 times, maybe 3 times in the last 50 years. I don't see it very often. I've been trading for a few years.
Right.
I've not seen this type of correlation, this type of, movement in the stock market and in the U.S. dollar. So it's very unprecedented, and in fact, some people would say it's almost a little bit of it's a little bit of a sign, that when things get this far out of balance, normally we're at 0.4, right now we're at minus 0.7. When they get this far out of balance, it's almost like the concept of divergence, right, where things are just not working the way that they normally work, and then there's another thought that the reason why we're so negatively correlated between the U.S. dollar and the stock market is because of the easy money policy that we've been pursuing, for the better part of 8 years. So I think that really is kind of where we're at, and I think what typically happens, and you can share your thoughts on this, but typically what happens when we see this type of divergence in what normal patterns is that there is the movement back towards the norm, and I think it's hard for us to see those movements because they happen over a long period of time. It's not a day, it's not a week, it's not even a month, but it's 6 months, a year, and we can't, for some reason, we can't keep track of movements over that long of a period of time.
Right. So let's bring this all together and how do we make money off of this? Maybe I'll share my thoughts and then you can share yours. I think the bottom line is whether the stock market's going up or down, whether the currency strengthening or weakening, there's always opportunities to take advantage of it, right? And so these are good things to keep in the back of our minds, as to say, oh, it's going up, it will continue to go up because of XYZ reason, but we really look and zone in on the pattern, whether it's an hour chart or a 1 minute chart, or maybe on a daily chart this would come into play, but less than a daily chart, you're still going to have these patterns going long, going short, and so to take advantage of the pattern, and the volatility right then and there, as opposed to holding on for 6 months. Well, what are your thoughts?
Well, I'm right there with you, Nate. I think, you know, the discussion that we're having today is a macroeconomic discussion. You know, it's trying to make sense of all of the flow of money throughout the global economy, right?
I can't keep track of my own billfold, let alone trillions of dollars,
Yeah,
right?
How many checking accounts in America are unbalanced, right? Yeah, how are we ever going to make sense of all of the flow throughout the world? And so I think, you know, as traders, I think your point is exactly right. You know, we keep this in the back of our mind. We have maybe it creates a bias, you know. This correlation can't last forever. And so there's going to be some movement back, and that'll happen over the course of months. So it's not anything that I need to worry about in my trading sessions in the morning, unless there's something that's going to influence that, a news event, right? Mm-hmm. In which case we'll possibly get a shock to the market. My job, your job, is to make most of those price movements in the now, right? Not over the course of 6 months. That's an entirely different conversation and a different style of investing, right? So I think I'm with you, you know, keep that, file it away in the storage, you know, put it away in the storage bin and know that it exists. Know that, you know, when news events come out that influence that it will likely have an influence on price action, and then just trade, right? Just get in there and trade and read the markets and use the volatility and the current trends. I don't know what.
Yeah, no, I think you've summed it up really, really great. I appreciate. It's always. You know, it's funny that every time you open your mouth, I always learn something new. So, and I've been trading with you, for a couple of decades, well, at least 1 decade now, right? But no, it's been great, and hopefully you guys have learned something. We appreciate you guys tuning in on our YouTube Live, and we'll see you same time next week.
Yeah, thank you, traders, and just want to thank everybody for participating also in the Valen trade. We'll be taking all of those entries and selecting a winner. And then we've got another challenge on tap for March. We'll reveal that in the next week or so. So stay tuned for our March challenge, our trading challenge for the month of March. Probably has something to do with green, St. Patrick's, Irish.
Yeah, I don't know,
maybe.
Luck of the Irish.
Luck of the Irish, something like that. All right, traders, so good to be with you today. Thank you for tuning in. Subscribe to our YouTube channel, and we'll see you next Wednesday, same time.
Same time.
Oh, by the way, Trader on the Street yesterday. Check it out on our YouTube station or on our YouTube channel. It was a great session. I had an opportunity to trade with Lauren Odell. Lauren is a good friend of mine. They've been friends for about 4 years. Mm-hmm. Man, his story is amazing. He suffered a stroke and has over the course of the last year, you know, been heavily engaged in rehabilitation, trying to get his motor skills back and all that. And yet, you know, through all of that, he's got this determination to trade. I love it. He has an unconquerable spirit. So check out that Trader on the Street episode 4. It was a great trading session, and something I think what Lauren said in that Trader Live or in that trading session was profound. I mean, it's stuff that every trader could greatly benefit from. So check that out. Other than that, we'll see you in the trading room tomorrow and YouTube Live next Wednesday.
Happy trading.
Happy trading.